What is up, guys? Taiki here, and the Curve Wars narrative has really picked up steam recently, and it's kind of a really difficult concept to understand, right? I wanted to make this video public. I recorded this video with Xerox Chaos roughly a month ago for the private Discord, but with the recent market correction, and I know a bunch of people is looking for ways to earn passive income through yields and whatnot. I think Convex is a really good asset for that. So I want to make this video public. It's literally everything you need to know about CVX. We talk about why Curve is important, what is CVX, and like fundamentally why it's undervalued. I mentioned in the video that I do want to pick up a bag, and I was like thinking about like which asset to sell in order to buy more CVX. A month later, I still own zero CVX. I definitely will own some CVX or a curve related asset in the future. So feel free to front run me. That being said, I encourage everyone to follow Xerox Chaos. I think he's going to be a thought leader in the space. He's incredibly smart, and this video will be proof of that. So I hope you guys enjoyed the video, and let me know in the comment description or in the comment section what you think of it. Thank you. What is up, guys? Taiki here, and today I wanted to have 0x Chaos on, I guess, and make this video about Convex just because it's one of those projects that I've been finding really interesting. And I know deep in my mind that it's severely undervalued, but it's one of the things that I haven't really dove deep in. So Chaos has been a really valuable member in the Discord. He's a moderator now. He's always posting about his thesis. And I just thought it would be great to have him on and I guess make a video that we can refer people to, right? Because there are a bunch of people trying to get into Convex and Curve every single day. But if we have a centralized video with a bunch of sources and just a general overview of Convex, I think it's going to create more constructive discussions in the future. So thank you for being on, Chaos, and how are you doing today?
Good. Thanks for having me, Taiki.
Yeah, so let's just get right into it. So, I mean, I actually just want to give like a brief background of like your journey to crypto and like Convex and stuff, just before we get into it?
I've actually been in crypto since 2013. Like my background is, I've been in the VC-backed industry for like, I don't know, since like 2008. More on the entrepreneurial side. So I've started three companies, and I've sold two already. So like my interest has always been in the intersection of like, product, business, and tech. And back in like 2000, like probably early 2000, like 13, 14, like all of the VCs were pretty much like starting to pour money into like blockchain technologies and whatnot. So I bought a couple of Bitcoin back then. Back then it was like stupid cheap. Kind of grew up in like got more serious in the 2017, 2018 cycle. And then in this cycle is actually the most interesting because for the first time, you actually have a lot of just like more like apps on top of, kind of like the foundational layer, which is like, Ethereum and, all the various like L1s. So some of the stuff that was hyped up back in like 2017, 2018, now you're actually being able to see a lot of it come to fruition and play around with certain things. But in terms of macro, like my investment timeline is normally within like more in the 5 to 10 year time range. So a lot of my thinking and theses are based off of that. So Convex and Curve are just one of the big ones that I think are super interesting. Obviously, I'm like a super ETH and super Luna Bull. So, those are different topics on a different day. But today we can dive deeper into like Convex and Curve.
Awesome. Yeah. So let's get right into it. And thank you for preparing this presentation. Yeah.
Cool. All right. So the way I structured it is, going over a couple of topics because throughout the Discord channel, there are a lot of like common questions, and I think kind of level setting and getting to a common understanding, I think is probably like step one before we can have like interesting discussions. So we'll go over some primers, basically sharing some resources that I thought were really helpful, just so that kind of shortcut the learning curve, so I don't have to repeat a lot. And then we'll go into like Curve, why it's interesting, as an app and as a business. Who the stakeholders are, and why I think it's become more of like the runaway winner in terms of like just DEXs. then what Convex actually is, because it's really, really confusing just because, you know, in crypto, I guess like they don't really invest a lot into like user experience and design. So all the various bits of information, I can kind of like start putting it together for people to help them understand like what they would be investing in if they were putting money into Convex. And then next over like some analytics, which I think that's probably like the core. You know, helping people understand like what to look for, like what are the key performance indicators, so that when you do put money in and it's not around, right? Like you should have conviction in whatever you put in, and know what to look for in the event, like, you know, you consider, okay, is the investment going like positive or negative and whatnot, and you know what your exit strategy is. So and then I'll talk about like some fundamentals and catalysts that I see in the near term and medium term. But with that being said, you know, I'll just dive right into it. So a couple of good primers that I saw, and I kind of pinned this in the Discord channel. So before you even like think about diving into Convex, just look at these education resources. I thought each one is pretty helpful in its own respect. So the first one is really from Credible Crypto. And what he goes over is literally, if you look at it, clocks in at about an hour, and he literally goes over like all the different interfaces, what Curve is, some interesting things about like the tokenomics, same thing with Convex. And he's actually like a super, you know, technical analysis, more like a trader side, but like I'm actually part of his Discord, and we talk about like Convex with like a lot of like community members as well. So we got him really into Convex as well. So he's become like a full like, you know, Convex like maxi almost. Another really good resource is this one, which I believe we actually have a HFA member, 0x Cat, who produced this.
Yeah.
And super helpful. Just goes over like if video is not your thing, you know, she has a pretty good just overview of, you know, all the different like concepts, et cetera, et cetera. Young Capital also has a really good resource in terms of, you know, why protocols or why different investors want to get into Convex. I'll touch upon that as well, but you know, another helpful resource. And then this one from Hugo May was actually one of the more interesting ones that I think kind of helped frame my thinking in terms of more of analyzing it as a business and kind of giving it a little bit more, I guess, taking traditional finance valuation models and kind of like applying it on top. So I'll go over some of his concepts as well to help, you know, everyone understand, like, again, why we all think it's like undervalued. So let's kill these.
Yeah, and these are like, I guess, primer, like educational resources for people to first get a better understanding of it, because this video alone isn't going to help you, you know, get to like chaos
for
as well.
Sure.
So go through these resources first in whatever way you want to digest them, and then hopefully over time you can understand it better. Because for me, like I knew about Curve. I mean, I knew about Curve because this is like 2020 Convex when it first launched. I was like, okay, that's interesting, but it took me a while for me to fully, you know, fully understand it. You know, so I'm pretty sure that most people, they're gonna have a similar journey of hearing about Curve. Okay, that's cool. Hearing about Convex, that's cool. Okay, why are protocols buying it? And then you kind of get into this rabbit hole of, oh, you know, like, so yeah. So anyways,
exactly.
Yeah.
Cool. So Curve, if you kind of look at the app, like fundamentally it's just a DEX, right? There are a lot of like automated money makers. You know, Uniswap is kind of like the beast in the space, and Curve is very unassuming. And it's kind of interesting, and I think that's part of why people are turned off with Curve. You kind of look at the app and you're like, wow, like how the hell do I use this, right? Because it was designed by like techies essentially. But what's under the hood is actually interesting. And if you look at it, what Curve is actually from a TVL standpoint, Curve is actually the top. over 20 billion in TVL. Most of it is focused on their core product right now, which is stable swaps. So the best analogy I give to people is think of Curve as kind of like the Amazon of DEXs, right? If you look at a DEX, there's a couple of stakeholders. There's the liquidity provider. There is the protocol that actually has the product, which is, let's say it's like Luna's, UST, Spell is MIM, and their product, what they're trying to do is they're trying to create a marketplace so that people can exchange in and out of it. And the third piece is the traders. Traders want like the lowest fee possible. And Curve, the reason why Curve has been, I guess, like the dominant DEX is their tokenomics model actually makes it so that all of those three stakeholders are aligned in terms of seeing the protocol evolve. So the way they do this is, if we kind of dive into the token economics, Curve, the token, is actually used as kind of like a reward or incentive for each of the pools. Curve is unique in that, like in Uni or Sushi Swap, for example, Sushi determines like, how much rewards are like issued onto a specific pool or a gauge. Curve kind of like decentralizes that decision-making process. And the way they do that is if you have Curve token, you can actually lock it for a specific period of time. Their locking mechanism is called like vote escrow, VE Curve. You can lock it anywhere between, a couple weeks to, 4 years. The difference is that there's a tiering mechanism where if you lock it for longer, you get more voting power. Now, not everybody is interested in locking for an extended period of time. And this is where, game theory and stuff gets really interesting with Curve, because if you think about it, the core business or the core liquidity providers are the ones most incentivized to actually hoard Curve and lock it, because they want their pools boosted more than other people's pools, right? So right off the bat, Curve has given liquidity providers an incentive mechanism to stay on the platform, because the more Curve they accumulate, the more they want to stay on the platform, because they've already spent all that time. It's like kind of like a sunk cost. And by doing that, then they kind of like increase the ability for them to like kind of like boost their rewards. So when you look at the Curve site, you see a range of rewards actually, which is kind of weird because you don't normally see this in other platforms. And this is all based on like how much Curve you have locked so that you can boost it. Now, Curve before Convex came along was actually quite not interesting, because you had to be a whale to accumulate like a lot in order to get a really big boost. So along comes, Convex. And Convex is actually two different businesses in one. And if you kind of remember the three pillars, right? You have the LPs, you have the DAOs that are peddling their, stable coin or, ETH flavor, like synthetic ETH or synthetic Bitcoin, et cetera, et cetera. Convex is actually two businesses in that on May, when they first airdropped Curve holders, their first solution was actually for liquidity providers. And what they did was they took the Curve model and they were like, look, a lot of people don't want to lock for like 4 years, but we know that a lot of people want max boost, right? So what they did was they simply say like, okay, we're going to give you boosted Curve staking. You deposit your liquidity, and what you get is, let's see, and what you get is extra APR, or the max APR actually. So if you look over here, every single one of these pools on Convex, you're going to get like the max APR via Curve, because Curve owns Convex owns most of the Curve now. So if you think about it, they've actually created a marketplace where you almost like unionize all the vote escrowed Curve in the form of CVX CRV. All CVX CRV is, it's like a wrapper for a VE curve. And what you've kind of given people or LPs, you've given them a choice to actually just give all your curve rewards to Convex. And then Convex does all like the boosting for you behind, and all you have to do is deposit your LP in a passive fashion. Now
Yeah,
that
so
yeah, go ahead.
essentially, like instead of a whale or like a whale like locking up curve for 4 years to give him or herself boosted LPs, like now everyone can use Convex, like lock it up together, and Convex can kind of control like most of the VE curve, right? That's kind of
Yep.
like the
Yep. So
simplistic version.
yeah, the simplistic version is exactly that. It's kind of like it's turned the retail LP into a whale, essentially, so that they can kind of compete on the platform as an LP. Now, the only toll that they give is or that they take is, look, you just have to lock or give Convex control of the vote escrowed curve that you receive as your normal income for your LP position. So if you kind of take a step back, then what is Convex when you look at like the LP side of the business? On the LP side of the business, what it is actually it's a yield booster or yield optimizer as classified by DeFi Llama. And if you look at this, like they're by and large, like, they're actually larger than, the rest of the top 10 combined, mainly because they service the entire curve ecosystem. But their model is obviously extendable to others, and I'll talk about that in fundamentals and catalysts. But Convex, at its heart, its first product is essentially a yield optimizer for retail LPs like me or you, essentially. So when you go in with like stable farms and you want like your max boost, you basically deposit it on Convex because you're going to get more on Convex than if you deposit it on Curve by yourself, essentially.
Yep.
Okay. Now that in itself wasn't interesting until they introduced a solution for DAOs. So DAOs I kind of like broadly classify as the Lunas, the Spells, the Fraxes of the world, and they basically have a product that they try and push out, which are like stable coins or like synthetics. And what they did was they actually launched an incentive marketplace. Everyone's at this point has heard of like bribing, but essentially this incentive marketplace was launched in September. It wasn't until September where Convex and Curve got really interesting. That was really one of the fundamental catalysts that push both of these names into the forefront, because for the longest time, if you look at Curve's chart, it's actually pretty disgusting. It follows like most of the
it's just farm token. Yeah,
it's pretty much farm token. It's actually interesting because like every single token essentially follows like this path, where you get the initial pump and there's a huge distribution period, and let's see. Yeah, Curve was pretty bad for a while, and then it started like picking up. So this part, back in like 2020, it was pretty depressing, and then it went up, and then it went down during May, and then it started picking up. But it wasn't until like right here, where Convex launched their marketplace, essentially. Like Vote Lock Curve was kind of like a thing. And what Vote Lock Curve does is it gives you essentially access to all the curve that's kind of been like accruing within like the Convex treasury, essentially. So all that voting power that it's amassed via its first solution, it essentially created a mechanism to monetize it with the marketplace. So you do all that via Votium, and there's a lot of tools that are available, and we'll go over some of those. But the analogy I like to give is, if you take a step back and abstract everything, I think everyone's familiar with Google. And if you look at Google, its core product is search, right? That's how it kind of like amasses most of its like attention and eyeballs. Now, Curve as a platform and with their like low cost swaps, their Amazon strategy has essentially like that's the equivalent, right? Like they've kind of built a moat around liquidity and they made it super cheap for people to swap like in and out of like different stables and like different synthetics. Now, Google obviously doesn't make money off this search alone. It wasn't until they actually started tacking on advertising. So they have two sides of the marketplace for advertising. They have Google AdSense and Google AdWords. AdSense essentially allows other publishers to tap into kind of like the advertiser base that Google has, right? So if you're a publisher, you can stick ads on your site and you're making money via Google's relationships. Google AdWords is essentially a marketplace where now you can bid on the space on Google search page, as well as on all the publisher sites that are partnering with Google. So I thought this was an interesting analogy and it kind of helped me frame in my mind, okay, well, Convex is actually multiple businesses. And each of those businesses, you have a very straightforward way of evaluating the fundamentals if you know what to look for. Because my background is more in like business and product. So I look at specific KPIs or key performance indicators to determine, okay, is this thing going to be interesting or not interesting in the long run? So the analogy over here would be Google search is kind of like curve swaps. Google AdSense is, their first solution, which is LPs. And then Google AdWords is the marketplace, and Convex's incentive market is essentially the monetization engine for all the curve that they've acquired via the Boost product that they've had, right? So now you have like those, three key pillars, and you can kind of get an understanding of like, okay, that starts to make sense in terms of what Convex is.
Yeah, it's like things are being built on top of one another. Like when like in 2020, I saw Curve and I'm like, yo, this is a shitcoin. Like, what the hell? It's
Yeah.
like, it's like, look at these
Same.
inflationary wars are ridiculous. Like I saw the Curve and I'm like, bro, like, what even is this? And like,
Yeah.
then like people are like locking it for 4 years. Like, are they nuts? And
Yeah.
then when Convex came, initially I kind of dismissed it just because that was my bias for Curve. And then over time, I keep seeing like the data on like, or just like, I just keep seeing like protocols gobbling it up and stuff. And I'm like, okay, like there's definitely something here.
Yeah.
And yeah, we'll go over that like later. But
Yep.
yeah, it's funny how our biases change. And that's part of being like profitable farmer, trader, whatever, investor in crypto. Like you have to be open to like just flipping your biases, like,
Yeah.
yeah.
Yeah. I would definitely agree. I think, I was very much like, kind of like a ETH BTC maxi for like the longest time. And then it wasn't until I followed like, I think Crypto Yield Info, and he basically farms everything under the sun. But one of the more interesting ones was he pushed Curve pretty hard early on. And he was like, guys, you got to understand like, the tokenomics model and why the incentives align. There was always like a missing piece in terms of like, why me as like a retail LP, like why would I be interested in Curve? Like I understand like the stable swaps and wanting like the cheapest, like the lowest slippage and the lowest fees at volume, like that part resonated. But in terms of, how much, Curve was like what the inflation was for Curve, the token, it definitely was not interesting until Convex came along. So, okay. So one of the things I kind of wanted to jump into is actually the tokenomics model for Convex, sorry. So Convex actually has a couple of like products as part of their LP boosting solution. The first one is CVX CRV, which we kind of talked about. It's basically just their wrap version of vote escrowed Curve. But what they do is they incentivize you to actually or convert your Curve into CVX Curve by giving you additional CVX rewards on top, right? So if you're a curve holder and you're like, okay, like it's just sitting in my wallet or whatnot, or if you're kind of like in the camp of curve holders where you really don't want to lock it for 4 years, but you still want it somewhat liquid, then CVX CRV actually gives you almost, it's basically like a liquid staking model where you can convert it, you can exchange it back into Curve at any time because Convex has created a Curve CVX Curve pool within the Curve platform. And the benefit is you're helping the Convex community by adding to, I guess, like the lock pool. And in return, you're also getting CVX rewards on top. In addition to that, if any other protocol decides to airdrop VE Curve holders, if you have CVX Curve, what they'll do is they'll kind of like pass it through to you. So you actually lose nothing by converting it to CVX Curve, and that's basically their intention because they want to hoard as much Curve as possible. And then the way the tokenomics actually works for the Convex token is over time, for every 100K of Curve farmed, what you'll do is you'll mint like a certain number of CVX. The interesting thing is the more Curve you like, or every 100K starts tapering, but once you get to like the 200 million, notice that, or 100 million, you notice that you're already at 80% of the CVX emissions that are pushed out. So CVX total supply will never be more than like 100 million, basically, right? And then the question is, if over time, the more Curve is farmed, the less CVX is emitted, then where are the interesting inflection points, right? The interesting inflection points are actually coming up fairly quickly because right now, because I don't even think the Convex creators thought that this much TVL would actually be deposited within the Convex platform. And what's happened is the more TVL that's actually deposited, the faster the tapering actually occurs. So essentially what you're doing is you're kind of accelerating this, and we're actually getting to a point where almost, I think by end of this year, we'll have 80% of all Convex basically farmed, which is pretty crazy if you kind of think about it in the life cycle of the token. I think Delphi actually, like Jeremy Ong over at Delphi actually did an analysis, and based on the current farm rate, by the end of next year, we'll be at 90%, essentially, based on like the current farming rate. The reason why this is interesting is because CVX is essentially a leveraged play on the Curve token. What that means is, if you look at this chart, once we actually hit 100 million, the amount of Curve that's actually going to be farmed at that time is going to be 650 million, right? So at the very least, mentally, you can think of it this way. The amount of locked basically locked Curve on the platform is going to be at least 6.5 to 1, right? So that is like essentially going to be like the base value, assuming that 100% of the people that own CVX, like vote lock on the platform, the ratio would be 6.5 to 1. But we know that
like the backing, right? Like backing,
yeah, you can think
Convex.
of it as the backing, right?
Yeah.
Now, then what happens after this, right? What happens after this? That means as more CRV is farmed over time, that levered bet gets like basically accelerates, right? Because Convex isn't going to stop providing their LP boosting service. It's still going to be the best boosting service out there because they control the most lock
V
curve.
curve. Yeah.
Exactly. So over time, you're going to see like the ratio of total curve to convex increase from like, 6.5 to like 7 to 8 to 9 to 10. And there'll be scenarios where it's going to be like 10, 20, et cetera, over time, assuming that curve continues to maintain its dominance, at least in its current like form. So
Yeah, and that's why like when protocols buy CVX, there's just like these stablecoin protocols are kind of positioning themselves like Frax and like Wonderland bought like $25 million worth of Convex like
yeah,
recently. So
yeah,
like it's definitely a very smart thing to do, assuming that curve is going
yeah,
to be a thing. But I would consider them a blue chip at this point.
yep. And I think from their standpoint, they're looking at it from a long-term point of view, right? It's if they know that at the very least it's going to be 6.5 to 1, mentally they already have that, but they know that they're willing to pay a premium because if they have like a long-term view of their protocol or their ecosystem, they know it's going to be very curve dependent because curve is the best place to provide like my best analogy for a curve is right now, like you might think that 20 billion TVL is a lot, right? But if you look at what curve actually provides, it's actually currency swaps at low basis points between like currencies or different currencies. Now, if you look at traditional finance, the best equivalent is actually the foreign exchange markets, right? Foreign exchange markets, if you kind of assume that at some point, all of traditional finance rails are going to be on DeFi, and you're going to look at like, okay, what mechanisms or what protocols are open enough, stable enough, time tested enough, right? From longevity as well as security, to be able to handle the volume of like FX as a market. FX as a market is actually $70 trillion. And that's trading between like USD and a variety of like other currencies from different nations, right? But if you look at how everything's evolving, you already know that USD peg stablecoins are becoming a larger and larger part. But with Keeper and other platforms, you're starting to see an introduction of other, I guess, like currency pegged stablecoins as well. And with Luna, one of the things Luna has is also like a basket of other stablecoin currencies from different nation states. And I can see a situation where it's not just USD, but Curve becomes like the de facto like foreign exchange market for DeFi, essentially. The only difference is, in addition to nation state like fiat currencies, it also supports stable swaps between synthetic currencies, like the different flavors of Ethereum and wrapped Ethereum, the different flavors of like Bitcoin, and sky's the limit essentially. So, I view the market potential of Curve as akin to the FX markets essentially. So there's a very, very long way before we get there. But if you have like kind of like a 5-10 year horizon, and if your thesis is already, look, all the traditional finance stuff is going to move over to DeFi rails. And if traditional finance is looking for the most battle tested DeFi rail there is, it's going to be Curve. It's not going to be any of these other flavors on all the other chains. It's going to be on an Ethereum chain, and it's going to be the one that's like most battle tested that everyone's basing it off of, that has the best tokenomics model, which is my bet is, long term it's going to be Curve. So
Yeah, and I agree. Yeah, and the keeper he referred to is KP3R, Andre's project, which
yeah,
I
exactly.
made a video a few weeks ago, but yeah, it's very early. But yeah, if you have this long-term time horizon and you understand, like why there's so much TVL on Curve, there you go.
Exactly. So, so that's CVX. And I think the big thing about CVX is, okay, we just went over the boosting solution, why the tokenomics works with that, and what's the analogy, right? A lot of people ask like, oh, well, what if bribes dry up, right? Now, there's actually a very clean way, and I think the Google analogy is best because my background is actually in ad tech. So I build like all these like real-time bidding systems and stuff like that. And I saw the same analogy happen when Google first came out with their product. Everyone was like, oh, why would everyone use Google and like bid on Google to be able to find users, right? What if users stop using Google search? Or what if advertisers, they stop like, putting money into Google AdWords, right? And my answer to that is, I view Convex as actually more like a B2B business. Now, B2B meaning if you're a DAO, your business is actually to make sure there's a liquid market for the product that you're actually issuing, right? So with stables coins, it's making sure that you can swap in and out of various stables. And I think this is a good segue into like some of the analytics and why it's actually with Convex, there's like first time ever a way to measure how effective the emissions or the amount of money you're putting into something, like how much you're going to get out of it, right? Okay. So let's go into some of the analytics. Let's go into Votium or Llama Airforce. I think this is the link. So Votium, so first, this site, Llama Airforce, is a community site. It's probably the best in terms of just convex analytics as it result of pertains to how much bribes and all that other stuff. So when you actually look at the site, they have like a flyer that kind of advertises like, okay, if you do this strategy, this is your APR. If you do this strategy, you get this APR. And I think it's meant to just advertise like if you need to promote it to like friends, like, an easy way to promote. If you look at the annualized revenue, it's quite insane. It's based on the Curve token value, but as of right now, it's almost like $1 billion. When Curve was, before this latest market dip, it was maybe like $1 billion plus. But we're talking about a protocol that's basically only about, I want to say like 7 months. It basically has like a 1 billion annual revenue run rate, which is quite insane. In startup land, if you actually had a startup that grew that fast, I think the multiple you would put on that earnings is probably 50 or 100x. You would pay that much of a premium to actually buy into like that stock. Okay, but the interesting thing is actually Votium. So this is the marketplace that I was referring to. If you kind of go into the overview, back in September when this
Actually, wait, before you go over, can you go to like the Votium website just so people have a quick understanding of like what it actually is?
Yep. So Votium is essentially a marketplace. They're kind of like a sister site to Convex. And what they do is they kind of like just provide a place where protocols can deposit what we call bribes or incentives. And it provides a mechanism for vote lock Convex holders to decide, okay, which curve pool do I vote for in order to get that incentive? So over here, if you kind of look at this week's actually, I think resulted in like another all-time high, like 7.2 million in bribes. And what you see is all these different protocols that are kind of like depositing and saying like, hey, vote for my pool, vote for my pool, right? You have OGN. So this is the protocol and this is the product that they're trying to push, right? So they're saying, okay, go vote on my specific pool. So you basically go in and you say, okay, I want some, spell, for example, then you would actually vote for like the MIM UST pool, select one, and basically you would get the spell bribes that are assigned within Votium divided by the number of people who have actually voted. So it's basically your pro rata share into that. But as you can see, like there's actually quite a laundry list of really actually like valuable assets that are participating in this marketplace. There's Luna, there's like Frax, which we just mentioned. CVX itself is actually incentivizing their CVX CRV pool, so you can stack even more CVX via this as well. Abra or Spell, Alchemix, and the list goes on. But the layer that helps you kind of like look into how much money you can make round by round and like the history, the tool is actually Llama Airforce. And you can see that when everything first launched back in September, there actually wasn't like a lot of activity. If you look at like round one, it was really just Frax and Alchemix and Ank. And I think it's actually no surprise because like Frax is actually one of like Tetranode's portfolio companies. So they kind of like bought onto this concept really early on in terms of like incentivized liquidity. But as you can see, every round, more and more protocols start understanding that there's actually a product that they can use to drive liquidity to their pools, and basically reward their users for actually like putting money into those LPs. And every round, you notice that the number gets like larger and larger. And if you kind of look at the overview, the couple of metrics that you want to look at, it's not necessarily the overall revenue, because depending on like where we are in the market for that like 2-week cycle, it basically fluctuates. The normalized metric is actually dollar per vote lock convex. And dollar per vote lock convex has still been fairly consistent over here. Meaning even though more revenue has been deposited and part of the incentives, the question you might ask yourself is, okay, well, if dollar per vote lock curve is the metric that I should be interested in, like why is that kind of like flat or not going up in proportion? The reason is because right now, if you look at Convex, there's this concept called locked CVX. Locked CVX is only a portion of the overall supply that's out in the marketplace. And we haven't actually reached equilibrium. When I first joined the vote locking market, I think there was maybe 20 or 30% CVX locked, because people didn't realize like, oh, this is going to be a thing. So back in September, this was actually a fairly low number. But as more and more protocols started getting into the incentives marketplace, investors like me and you look at it and we're like, oh, wow, like we can actually use Convex to basically be a subscription service to all the best tokens out there, essentially as part of my APR. And even though right now from Llama site, it seems like it's kind of like flatlined around like this 40-cent number. Once we kind of hit that equilibrium, and I think that equilibrium is probably going to be around like 85 to 90% of convex lock, because I think, over time, the strong hands are going to win out, like the protocols, the DAOs, the long-term investors. They're the ones that are going to want to lock it for long-term and just like keep it there, right? And at that point, once we kind of hit that 85 to 90%, what you're going to see is this dollar per vote lock CVX. What we're going to do is we're going to probably see this move more towards this number. So what this number means is every single round, basically you have control over a certain number of CRV rewards and CVX rewards for any given LP, right? So for every dollar that you spend, actually, you're actually driving $3.24 of incentives to those LP pools, which makes it actually really capital efficient. Like instead of like blindly saying like, okay, I'm just gonna set up a pool 2 and I'm gonna like just emit this like, random number and have to like dynamically adjust it. For the first time, a protocol basically can say, okay, well, I know that if I deposit like 1 million at Spell, I'm going to drive for my LPs that are actually depositing like MIM UST or whatever, $3.24 of rewards. So then the number you have to ask yourself is it one-to-one yet? If the answer is not one-to-one, then there's actually still a lot more upside for bribes, right? It means you can actually do 325% more bribes and still be profitable, which means this number, 40 cents, could easily be at today's Curve and Convex prices. The equilibrium price for dollar per VLCX should actually be 40 cents times 3.25, which is about $1.30 maybe, right? But again, that depends on two things, like the price of CVX and the price of CVR, because those are the two rewards that are being pushed to LP holders. So if you ask me, like, is this thing scalable? I think if you think that Curve token value is going to increase, like long-term, forget about short-term price fluctuations, and Convex price is going to increase over the long term, then every dollar that you spend, this number will equally go up over time as well, which makes it still like a valuable market for someone to actually go in and bribe versus just randomly doing your emissions. That's why Spell has effectively, they kind of went to more of like a 0% emissions strategy. They said, look, we're not going to like incentivize the pools the old way, where we do dual rewards and we like leave it here. What we're going to do is we're just going to use Votium, because we know for every like dollar of Spell we put in, we know exactly how much we're going to get out. And then every 2 weeks, I'm just going to adjust it based on like what the market is saying. So that's why it's more of like a B2B tool when you look at it. Similar to Google AdWords is a tool for marketers to basically measure their advertising spend, right? So emissions is fundamentally kind of like advertising at the end of the day, because you're using your admissions to kind of attract more users and more holders onto your product. So
yeah, fully agreed. Yeah, it's sort of like how Avalanche Rush, it's just pure marketing, right? Hey, come to our chain, we'll give you free money or free AVAX tokens. It is a form of marketing, just these high APRs. It doesn't have to be high, right? It's attractive enough APRs.
Exactly. Yeah, and I think that I'm pretty sure, like, the big brains over at AVAX, they have like their own mental framework or financial framework of assessing, like, okay, if I push this amount, like this is how much we're going to get back, like ideally. So
yeah, it's all like, yeah, it's funny too, because when these foundations announce these liquidity mining programs, they can assume that the token price will also go up because of like because people price in the future adoption. And I feel like that's what, I mean, this is not related to Curve, but or in Convex, but that's what I kind of noticed. It's like these foundations can just announce liquidity mining programs, and like they'll just like increase the value of their treasury by like 2, 3, 4x because everyone's going to buy the token. Anyways, let's continue on.
Yeah, I mean, that was the entire summer essentially, right? Summer into fall, like every foundation basically followed the Matic playbook in terms of like, okay, I'm going to announce, my Matic version. So
yeah, it's funny.
Okay. So the other, again, in the spirit of like teaching people how to fit, so the thing that I would look for over the long term is how close are we getting to equilibrium, right? And then what does that mean in terms of like how much I'm getting in terms of yield? The way I look at it is at some point we're going to get to more like a plateau in terms of like how much locked convex you're going to actually have on the platform. Right now it's at 66%. I think it's definitely going to slow down once you kind of get into like the 90 to 95%, because we see the exact same thing with actually Curve. Curve's amount of like vote escrow tokens, I think before Convex came out, it was maybe about 30%. And then now it's been hovering between like 90 to 93% locked, which is crazy. And that's when you saw like the supply shock and you saw like, the test pump that happened And once BTC settles, I think, we're going to see like, a pump of curve into like double digits, essentially. Okay.
Very bullish.
Well, that's assuming, Bitcoin, we're not at the end of the bull run. So
Yeah.
so
Fingers
take everything
crossed.
with a grain of salt. Like I'm just like an anonymous guy, right? So take what I say with a grain of salt. But my horizons anyway, like longer term. So even if we went bear tomorrow, it's it's fine.
Yeah.
Okay. Now the other thing is there's this awesome dashboard that this other community member created, and let's see if this is the right link. Yep. Okay. So Convex, this Convex dashboard is like actually super helpful in the sense that you can actually see how much Convex is actually currently locked or curve is locked within the Convex protocol. And this is essentially like, like what you were alluding to, like the back treasury, right? There's actually like money behind already that's locked in the protocol already. This is the amount of Convex that has been locked, but this is how much is staked. And what you can see is over here, you notice like the total Convex number is getting close to that 80%, right? Right now it's at like 779, but it's getting very close to that 80%. And at that point, it tapers even further, which means it's harder and harder for people to farm, which means it's also for the farming, like for the people that are farming and dumping, there's actually less sell pressure on the token as well, as it kind of shifts from weak hands to like strong hands. And what you want to see is over here, you want to see more and more CVX CRV being staked over time. But you want total CVX CRV to increase over time, but you also want more stakes. So over here, this is pretty healthy. If you looked at this dashboard in the future and you kind of see this like kind of like plateauing instead of like kind of like up and to the right, then that kind of signals to you, okay, well, maybe people aren't parking or LPs aren't parking their money and the flywheel is kind of like broken on Convex. So I don't look at things in dollar amounts. I look at things in terms of like unit amounts. So what you want to see is, again, that the first product that Convex has, which is this one, is actually doing its job, right? Because if this one's doing its job and you're seeing the amount of CVX CRV increasing over time and people are like consistently staking it over time, then that means this marketplace is going to be more and more attractive over time as well. So those are kind of like from the mental standpoint what you want to look at in terms of like data points. And you can see over here that because the LP solution is so effective, the amount of LPs that are being deposited has accelerated significantly, especially like past the summer into now. Convex revenue is basically the amount of like CRV that is farmed through the LP programs or the LP boosting solution that they have, right? So if people feel like Convex is still the best place to park your LP, then they will deposit, and this number should theoretically be up and to the right as well. And if you kind of look at it, there are this in terms of raw numbers is high, which is what you want to see. You want to see like a consistent increase. But you also see Convex total revenue over time. You're looking for more of like this exponential curve, right? So the steepness of this curve is starting to increase because the number of deposits as well as like price appreciation of like assets and stuff has increased as well. But this is exactly what you want to see over time because it kind of brings like that narrative to the forefront of like, look, Convex is basically like an income, like a revenue producing beast for LPs. They're already generating like 1 billion of revenue annually. If you were like a company generating 1 billion of revenue annually within 7 months of your life existence, there should be at least like a 50 or 100x multiple on your earnings. And right now, Convex is basically valued at what, like 1 or 1.2 billion market cap on 1 billion of revenue. which means right now the PE ratio is literally like 1 or 1.2 to 1, which is really unheard of. If you actually, if you go by traditional finance valuation metrics, like it's ridiculously undervalued in that respect. Over here, you see the convex curve locked per CRV locked. So this ratio is based off of like basically what it said. Locked CVX is like that 66% portion. And convex CRV is basically the amount of
the VE curve, right?
VE curve in the platform, correct. So this, I think when you first, when this first kind of got on your radar, or when I first joined your Discord about a month ago, I think this was around like 7 and change, right? Then the reason why this is going down is because more and more people realize the value of locking CVX. So in terms of this number, like I wouldn't be surprised if it kind of like fluctuated between like 4 and 5 and dipped a little bit, because it's got to hit that point where it's like a little bit more of an equilibrium. Once it hits kind of like 90 to 95% lock, then you're going to see this number reach like, you know, what we're talking about, like the 6.5 to 10 to 20, et cetera, et cetera. So, and then that's when your lock curve becomes like more and more valuable. Okay. Other metrics that are really interesting are, you know, number of convex holders, really, really low right now, which means, you know, anything sub 10K, you're like ridiculously early. A lot of people are like, oh, has this thing like kind of like moved on? Has it like pumped enough? But this protocol actually only has like 7,000 plus holders, albeit most of them are probably more like fundamental type of investors, or like, you know, early curve degens or protocols. But over time, I suspect, like, you know, again, this is more in like the 3 to 5 year time horizon. If traditional finance, institutional money is looking to park their money in solid yield strategies, and they're looking for stuff that's like secure, not complex, Convex is going to be on the top of the list, because Convex essentially gives them, checks all the boxes for them in terms of like, it's a business that's easy to understand. Once you kind of like understand like the framework, and, you know, there's all these analogies that I just gave you between like Google and the marketplace versus the search product, et cetera, et cetera. The 3 pillars are actually really clear. No one's actually like packaged it into like a pitch deck or, you know, something for an investor to quickly and easily understand. But I see in like 3 to 5 years time frame, if you're going to look at like, okay, where's institutional money going to go in? It's going to be in these type of investments. And that's where I see like, you know, Convex longer term as where the value is.
Okay. Yeah, it's like really simple too. Like if you're an institution, if you, as long as you understand the curve and like why it's important,
yeah,
it's like much easier than like farming LP pairs.
Yeah, exactly.
On UniB3, you know, it's just like, okay, I just buy this thing, I lock it, and I just like, you know, collect like yield. Oh cool, you know.
Yeah,
I think a lot of people can resonate with that.
Yeah. Cool. So yeah, so from an analytics standpoint, you know, those are kind of like the 2 main pieces that, you know, you should just have bookmarked if you're like invested in Convex, and, you know, you just want to like kind of monitor what the protocol health is and whether or not the, you know, KPIs are trending up or trending down, right? So when you look at fundamentals, like you kind of want to ask yourself then, okay, Convex, I get all this, but who are the people who will find Convex valuable, right? And I kind of have them in like 4 buckets. The first bucket is, you know, DAOs with product pools to incentivize. So you have, you know, the Fraxes and Lunas of the world, and I'll kind of help quantify that for people too. And then you have DAOs that are looking to diversify their treasury. So you have Rook, you have Time, Wonderland, who just dumped like, you know,
25 million.
Yeah, basically.
Damn.
To buy about like 1.2 million, you know, Convex tokens. And we all know who they're going to vote for, right?
Spell, mim.
Exactly. Now the crazy thing is, like, they vote for it and they're just basically collecting their own token back, which, is a different flywheel, and we'll kind of go over that. But that's where all the gamification comes in.
Yeah, I mean, on Twitter, like when he announced it, Danny
Yeah,
announced it, like people in the replies were like so upset. It's like, oh my god, like you're using the treasury to buy this
yeah, yeah,
altcoin. But then if
yeah,
you actually understand CVX, it's like, oh, that's super bullish. That's so
yeah,
bullish still. That's so bullish.
yeah. It's like you're
That
supporting
ecosystem.
Frog Nation, right?
Yeah,
Like,
yeah.
so, that's his eco. And Wonderland is basically like his own personal hedge fund. So,
Yeah, kind of. For now.
for
We'll see
now,
what
for
it.
now, yeah, we'll see how it evolves. So, and then you have like DAOs looking to aggregate, right? They kind of see this flywheel, and now they're seeing if they can kind of put like another gamification layer on top. So similar to how Convex is like a levered bet on Curve, they're like, well, why don't we create like a protocol and kind of make a levered bet on like Convex and see, what type of game tokenomics we can apply on top of that, right? Personally, I'm not super bullish on any of it. Like, I think they're going to all see like short-term, positive price action. But they're essentially like funds accumulating, Convex at the end of the day. Some of them have more reason to do it, like, Redacted and Ohm are of the same, they're kind of like sister DAOs. And Bent like just came out of nowhere. Lobis came out of nowhere. But all of them realized the same thing. Like, if I have a war chest of Convex, like I can get, pretty solid yield. So let me see if I can like aggregate, supply, and create interesting tokenomics so that, people will be incentivized to park their CVX. Like, personally, I'd rather hold my CVX and lock my own. So, to each their own.
Yeah.
And then there's like the investors like me, just looking for strong, effective APR based on my like buy-in price, and I'm looking for future price action at some time. So, so what I did was I actually like started like putting together like protocols of participants right now, and if you look at it, there are a couple of different strategies, and actually, let's dive into the Frax strategy because I thought this was super interesting. So Crypto Condom, so he's like an awesome follower, or a follow on crypto Twitter. He's actually part of Discord as well, on Credible. So what he essentially did was he was like, okay, Frax got into the Bribe game really early. Why did they do that, right? And what he basically did was he analyzed Frax's approach and what they did to kind of like gamify the Convex marketplace. So Frax early on realized the value of it, right? Like, the value is if you have more liquidity on your curve pool, you tighten your peg, and you can grow your liquidity over time because people will be incentivized to park more money there so that they can earn the rewards. Now, if you kind of look at what happened, so Frax was basically doing nothing for the longest time. Now, you saw at what point Convex released their vote lock solution, right? That was around
Mid-September-ish, early
mid-September.
mid-September, yeah.
Exactly. Now, what happened in mid-September? All of a sudden, Frax became a very attractive token to hold. And Frax did this by being one of the first, I think like one of the first to really like test this marketplace out. I mean, they were the ones that like kind of like bid the most. So they kind of took advantage that no one knew about this and they jumped right in, right? So they really studied Convex really early on. And what happened was basically this, right? And the numbers speak for themselves. And it kind of gave people or DAO specifically a playbook in terms of like, okay, like how do we play this game, right? What did Frax do to do this? So what they did was they started accumulating and locking Convex really early on in their treasury, and then they're bribing, But when they bribe, the money that they bribe with, because they also have vote lock Convex, what they can do is they vote on their pool and they're actually collect their own token back in Bribe. And what that really means is if I own Convex, I can actually minimize my emissions if I use this bribe incentive mechanism, because when I'm voting for my pools, let's say I put in like 2 million, I'm going to get maybe like 1 million back or whatever, right? And then now I can take that 1 million. So the net outlay that I actually did for that bribe is actually 2 million minus like 1 million. So I actually only put in 1 million at the end of the day. And I can keep reusing that over time, right? So it's almost like this looping flywheel concept of now if I had like 50 million tokens to incentivize or put in my pool too, instead, if I actually hold Convex, what I can do is I can create this flywheel where I'm collecting my own bribes, and the 50 million tokens that I actually allocated as part of my like token pool for like this initiative, it actually lasts a lot longer. And for the first time, I know every single dollar that I put in, how much rewards am I driving to LPs that are helping to create that marketplace. And that's where this number comes in terms of for every dollar I spend on bribes, I'm actually getting this. But this number is actually really much higher if you actually own VoteLock CVX as well, right? Because the amount of money you're actually getting back in your own tokens actually reduces the denominator, essentially. So you're not actually putting $1 in. If you own a bunch of VLCVX and depends on how much you own, you're basically dividing it maybe by like 0.5, right? If you're getting like half that money back, right, then you're actually putting in like maybe 50 cents to drive like, you know, $3.32. So Frax figured out this game really quick. And that's all they did: buy and lock CVX, add your own liquidity, bribe Votium, vote for your own LP, receive your bribe back, right, to the LP plus CRV and CVX rewards. And what they've done is they've actually accumulated like a huge war chest. At the time of this post, it was about 700 million. But you know, they've basically, it's crazy. Like they basically accumulated almost like 1 million Convex tokens within their treasury, and they basically created this flywheel. Now, the interesting thing is, once this guy actually published this analysis, what happens, right? He basically starts tagging all the different DAOs and telling them like, look, if you're on Curve, you should be doing what Frax is doing, right? So what happened? So he reached out, you know, via Twitter to the Luna guys, the Spell guys, you know, the Angles, and, you know, Alchemixes and like the Fey protocols of the world. And the result is now you have Luna essentially just approved the proposal, which essentially talks about the same thing, right? Like proposal 1, like, hey, for bribes, what I'm going to do is I'm going to allocate X amount of dollars. And what we're going to do is we're going to incentivize like 2 UST pools. And on top of that, Luna's going to actually dedicate 250 million to deposit on Curve and actually farm Convex tokens for their treasury, basically. So they can do exactly what Frax is doing. So the TLDR, you can see like over here, they are starting to allocate more and more money to Bribe. So they upped it from, I think last round they did 250K, and then they said, okay, that worked really well. So let's allocate 12 million and do 1 million every 2 weeks to do the MIM UST pool, and also incentivize the Frax UST pool. So right now what we're seeing is Frax UST and MIM or Spell, they're basically forming like this kind of like decentralized 3 pool essentially concept, right? They're working together to incentivize their pools so that people will use their pools more than the centralized pools.
It's pretty sick.
Yeah, it's pretty sick actually.
I can get behind that as a
Yeah,
narrative.
yep, here. Um, yeah, so it's pretty crazy. Like, Rook, like I don't have a link here, but you can easily find it. But they basically said we have a huge treasury. I think like second or third largest next to like Olympus DAO,
Yeah,
and they said we're going to allocate like 40 million. I think they still have like low 30s to kind of like allocate to Convex to acquire more before end of the year.
yeah,
Time we just talked about.
yeah.
Redacted is about to launch. So all this is applying like buy pressure essentially onto.
Yeah. The mistake Keeper DAO made, which is Rook, is that like they announced it as like a governance proposal, and people like front ran that. And it was like I think Tetra bought a bunch of CVX when like
Yeah.
Rook announced it, and like so obviously like Wonderland they just bought it, just secretly, which
Yeah,
which is
like that's the way
which
to
is
do
fine,
it. Like if you're gonna do it, you're gonna do it OTC. You're not gonna do it like market buy sushi swap, like what Mochi
Yeah,
did,
and you're
right?
not gonna announce it either, like you don't say like, oh yeah, we're gonna buy
Yeah,
$25 million worth of CVX like next week. No, you just do it, like.
yeah,
And I know people don't like that just because it's like it's a
yeah,
Chinese hedge fund, but like it's in the best interest of like time holders, I think. But let's not
yeah,
get into that. I said that was funny.
yeah. That's like a separate thing for sure.
Mhm.
But if you look at it now you have like all these protocols that have essentially accumulated at least like 1 million CVX, right? I know at least like these guys have, and that's already like 5.2. You also have this guy Tetranode who actually has like probably like I think 5 to 6 mil. So right off the bat, 10% of the supply is already in strong hands. And the more and more people that actually start locking CVX, and the more and more protocols that see value in incentivizing their LPs, and the more, and these guys are more in like the other bucket of diversifying like their own investments. The more and more participants enter the ecosystem, then you can see a situation where, okay, now we hit like 90% vote locked Convex, right? And we know emissions are tapering, and there are a number of other catalysts that I'm about to point out that are really interesting too. So part of my, MO is, let's just let as many people understand, like help people understand what Convex is, right? Let's create that supply shock earlier rather than later, right? And hit that equilibrium so that everyone kind of benefits, right? Because the earlier you get into Convex, the better actually, because I have a number of like different calculators that help you kind of think about what the yield is. So okay, so let's say very very basic like Bribe model, right? So I got in Convex really early, but I still continue to vertically accumulate, by the way. So I got a ridiculous number from, airdrop really early on because I was into Curve early. But when Tetranode kind of posted like, okay, like people are idiots. I don't know why Convex is $2. Like this thing should be like, 10x that. He kind of had that rally call and like kind of like aped in really hard without knowing the vote lock model and all that other stuff later. But as I kind of saw the ecosystem evolve and like the tokenomics model evolve, especially in September, I kind of like went in a little bit harder, right? So, so it's really easy to kind of calculate what your effective APR is, right? So for me, let's say when I was like buying in at like $2, right, at that time, and I bought like 10K tokens, let's say, if the VL per CVX Bribe right now is 41 cents, then the amount of annual revenue that I'm actually getting from like just bribes alone is basically 5x my buy-in price, right? So even though right now, if you look at like, the Llama site, right? This whole flyer is like super confusing and you're wondering like, okay, why is this APR different than, the Convex site, like 6% APR that I see? And why is everyone telling me like, this is such a great deal? The reason is Convex doesn't advertise the Bribe APR because they can't. They don't know what the future APR is going to be. That's why this community site created this flyer to tell you like, look, based on the last round of incentives, this is what your APR is potentially based on the current CVX buy-in. That's based on the current CVX buy-in. Now, let's say you bought it in a lot earlier, or let me give you a different example, because this is like, not reality right now. Let's say it's 25, and then later on, CVX is $100. And, this reaches more like, the 1.2, right? Or actually, let's say like 1.6. So even though like that current APR, like in the future is 42%, right? You bought in at like $25. So your effective APR is actually, 166%, right? So again, like Convex, depending on your buy-in price and like, whatnot, it's not always up only, but again, I look at it from like a really long-term time horizon. So in 3 to 5 years, I ask myself if Curve becomes more of like the FX market for DeFi, if Convex becomes a de facto marketplace for Curve, as well as other Curve-like platforms. And if, the amount of Convex owned by the platform or Curve owned by the Convex platform increases over time, then I can kind of see a situation where, okay, even if we have like Bear, I'm still accumulating all these like tokens that will be future assets. And the effective APR on that is still going to be really high because I'm playing for next bull, right? As I'm accumulating now and I'm accumulating for bear market or throughout the bear market, everything I'm doing now is actually to position myself for the next bull run, right? So I'm not just looking at like the Convex tokens I'm buying. I'm looking at all the tokens that I'm accumulating right now, because I don't want to sell any of them for like short-term capital gains anyway. So I'm going to hold them for like a couple of years. And if the next market cycle winds up being, 3 years from now, 4 years from now, 5 years from now, that's great, right? I just have that money parked and like yielding for me. And it's not yielding in like dollars, it's yielding in tokens that are essentially assets that I want to hold long term, like a Luna or like a, et cetera, et cetera. So you have situations where, okay, like based on your current, and then let's say you're a conservative bull and your bribes wind up like 5xing, right? Now your effective APR on your buy-in is like insane. So going back to that example of like $8 and $25 and 0.41, let's say I'm accumulating stuff right now, and the effective APR is already 133%, but I'm looking at like even conservative bull case, like let's say, Luna, like I think Luna will 5x before the end of the bull run, right? Like we're talking about an effective APR on your buy-in of like 666%, which is insane, right? And the reason why that's the case is like, you're basically buying like, or you're earning yield in assets that are potentially appreciating. And even if it doesn't appreciate this bull run, I know it's going to appreciate next bull run. So regardless, my effective APR is going to be that at some point in the future. It's just a matter of like how long I'm willing to like wait, essentially.
I think this is just to demonstrate that like you get to accumulate assets that like you're actually bullish on, right? Like I think through Votium, you can like kind of choose which one you want to, I guess, like bribe to, right?
Exactly.
So like if you're bullish Luna, you just farm Luna,
Yeah.
Bullish spell, you just farm spell. Well, the spell's gonna go away sometime, but in the future, it's gonna be like that.
Yeah. Yeah. Actually, spell, they're actually upping their bribe. They're removing the direct incentives in the pool in favor of increasing bribes by like 70%. So they're actually going to go all in on the Votium bribes.
Gotcha.
Yeah. So they're not considering that as quote unquote emissions. They're saying like, look, like, we're not doing any like pool to type stuff or incenting the pools directly via Curve. What we're doing is we're going to like buy votes on a marketplace. So for some reason, they're not considering that emissions. To me, like they're still allocating that same budget to it. So I consider it emissions, but that's fine. That's all like marketing optics. Okay. So then from a CVX standpoint, then one of the things that I think about from fundamentals is price to earnings, right? So that's like the most traditional way of evaluating any business when it comes to like, stock market. And if we consider Convex as like a business, and if we consider their current revenue as 1 billion and their market cap at 1.2, then let's say if the PE ratio is like 1.2, then what are like, comps that we can use to kind of like think about it like longer term? Like the market doesn't reach this like mindset now, but over time it's gonna, like these type of KPIs or these type of ways of evaluating, protocols is going to be more and more normal, because more people will realize, or more investors will realize, like, look, we already have frameworks here. DeFi isn't different in the sense of how to value a business. It's just different in terms of how that business runs. So similar to like Curve is actually just creating an FX market. We have FX markets. It's just going to run more efficiently. So it's like a step change technology on an existing market that exists already. And if you applied like, let's say like Apple's PE ratio, which is like below S&P 500, like a 30x multiple on earnings would make Convex price like $625. If you applied like S&P 500 average of 40, you're looking at Convex price of 833. And if you applied like Tesla's, like Tesla, everyone pours in money in Tesla because they believe in like the future earnings potential. So they apply a premium to that, even though the revenues aren't, quite there. If you apply Tesla, like super like Boltard type of like metrics, like, you're looking at like 7K. I'm not saying like this is going to hit tomorrow. I'm not saying it's even going to hit this bull run. But what I am saying is, when traditional finance or people that have like a lot of money, like institutions, they look at like these businesses that are on DeFi right now, and then they realize that this is just a different way of doing the same thing that we have right now in traditional finance. The only difference is how we do it, right? And how the earnings are distributed. But earnings are still earnings and valuation metrics are still valuation metrics. Then in, let's say 3, 5, 10 years, then they're going to start looking at, the businesses like Convex, like Curve, in a similar fashion in terms of like, how should we be valuing this protocol, right? And I think this bull run is the first time where we're starting to see a little bit of that, but it's still really, really early. But again, I'm looking at it from like, 3, 5 year time horizon in terms of, when things like catch up. So
yeah, it's a little different, right? Because convex revenue isn't the same thing as earnings. It's more like price to sales, and it's hard to figure out like what is. I mean, it's kind of hard to like. For example, like I've heard like the narrative for like sushi swaps, like their price to earnings ratio is so low, so it's undervalued.
yeah,
But
yeah,
they emit like they might make like 100 million, but they emit like $90 million with the sushi tokens. So what is the actual earnings? So that's a little,
like what's their EBITDA basically, right? Like what's their
yeah, I don't know if there's a way to calculate that, but like even I'm sure the margins, I guess, is like pretty high for Convex, just because it's like a
it's such like a low cost
software.
like it's a low cost software play. And it's not a complex contract by any means, which actually makes it even more attractive, because the amount of, or potential for like security issues and stuff like that, smart contract risk is less. Okay. Yeah, so what are some near-term catalysts? So we talked about the emissions tapering. I won't go into that. Curve 2 is actually another interesting one. I kind of made a post on Twitter about it. Some of the volume metrics are like a little bit off. DeFi Moon told me about that later on. But the net story is right now, Uniswap, even if Curve was like, maybe like 3 or 4x of this, the maroon isn't going to be like the lion's share. Right now, lion's share of the volume is actually in volatile pairs. Now, the reason why that's important is because that's how Curve and Uni make money, right? They make money on like volume. And Curve V2 is actually their first aggressive introduction of volatile pools, where instead of stable swaps, like you can do like, convex ETH, curve ETH, like basically like any permissionless like LP pool you can kind of set up on Curve very shortly. So they're kind of starting to drip these pools out. And if you look at the latest Votium, what you notice is something really interesting, because you notice a pool 2 was incentivized for the first time, right? And it's obviously Curve's own, but what they're doing is they're kind of like testing the waters, right? So even if like Curve 2 doesn't dominate the same way it dominates in terms of stable swaps, and they take maybe like 10, 20, 30%. What it effectively does with Curve V2 is actually it opens up the marketplace for Votium bribes to a larger subset of protocols out there. And Convex is going to move their pool over. Spell is probably going to move a portion over. Frax is definitely moving theirs over. Those are the existing players because they're already familiar. But I think over time, if Curve's value prop is lower fees, deeper liquidity, and giving traders lower slippage on their trades, etc., then it stands to reason that they will take like some portion, even if they don't like get to uni levels. But I think the longer term piece is more there's additional revenue streams and additional protocols that can participate in the Bribe marketplace in the very near future as well. So
yeah, I heard arguments on like Curve V2 being the dark horse that people aren't expecting.
yeah,
I think it's going to be hard to overtake Uniswap. I think that team is miles ahead.
yeah,
But
I think they have.
Curve is a
Yeah,
viable
like
competitor.
I'm not like Uni's product is pretty multifaceted in terms of like the audience that they cater to. So the Curve will take some of it, but Uni in terms of like their approach, they're approaching it with a different audience segment, and I think they'll still capture a lot of the lion's share of volume because of their brand and whatnot. So
yeah.
And then expansion to other protocols. So this one was another one where Frax has kind of like telegraphed that they would be adopting Curve as kind of like their marketplace, incentive marketplace model. And Frax alone is also like $1 billion protocol. So this is more of an example of like, okay, we Convex's business is actually creating liquid markets for these and marketplaces for these kind of like vote escrow, like tiered vote escrow type of tokenomics models. There are more and more of these type of models that are coming out because Curve has kind of started proving that that is kind of one of the best practices. So it stands to reason like more and more protocols can potentially leverage Convex from like a B2B standpoint to kind of create incentive marketplaces for their own protocol as well, similar to what Frax is doing. So the TLDR is Frax is going to introduce like another revenue stream for Convex, right? So Convex is not entirely dependent on just the Curve ecosystem. As more and more marketplaces start adopting Convex as kind of like their B2B solution, then like we can kind of potentially see like additional price action from that. So yeah, so those are kind of some of the near-term catalysts. And I think from the Discord, like a lot of people ask, like how should I play Convex? Like, should I be staking Convex, locking Convex, staking CVX Curve, et cetera, et cetera. I think ultimately, I would look at it from what is the time horizon that you're thinking of putting your money in. I think if your time horizon is like longer than 4 weeks and you're willing to like lock, I think Convex is definitely like more of like the higher EV play. I think Curve is definitely like more of a worker token in the sense that over time your token is actually going to diminish in value versus increasing in value potentially. like one curve is always going to be one curve, right? Well, one convex is going to be worth more and more curve over time. And then the other big question that people ask is, how much do I need to start? And that's a question I can't really answer for people, but just know that if you were to stake, or not stake, but like buy, approve, lock, you're easily like, let's say gas is like 75 to 100, you're easily going to spend $300 to $400 on just setting up your position. So if you ask me, like, is $1,000 good to start? Probably not, because that's going to be 30 to 40% of your buy-in. If you can get like low gas, you can probably start your stake or start your lock position with like $150. So I would say like at least 5 figures. I would probably do like at least like 25K to 50K at least, just that range, just because like you don't want your stuff to be eaten into. But if you're not thinking about like 5 figures, then you're really just accumulating CVX and not really like doing the transactions and whatnot. And you can, there are a lot of other community members that can figure out ways of finding how to get CVX without paying the fees, like through exchanges and whatnot. But like typically I use mostly DeFi, so like I'm not the best subject matter expert in that respect. So
yeah, well, thank you for this. I don't even know how long this video is, but it's gonna be a long one. Yeah, I think before the call I mentioned that I was like 75% there in terms of like going gigavolt hard. I think I'm like 90% there now. Yeah, in the last like 20 minutes, I was like contemplating like, how do I buy CVX? Like, do I sell my stuff? Do I just use my staples?
yeah.
But yeah, it's just like, I mean, it's a question I have to ask myself.
Yeah. You can definitely, you can farm it, you can, buy it, you can market buy it. There are a lot of different ways to accumulate. So I think that's up to, people to figure out themselves in terms of like how they can approach it. But from a fundamental standpoint, I think, convex, assuming that curve still has a dominance and, convex team executes, I think it's quite an interesting play from an investment standpoint. So
yeah. Okay. Anyways, let's wrap the video there.
Cool.
Yeah, I really appreciate you taking your time. Chaos, he's a humble moderator. If anyone has questions, well, first of all, watch this video first before asking any questions.
Yes, please.
Just so like the conversations on that channel can be more constructive.
Yeah.
But like I'll probably be more active, in the future, right? I just haven't had the chance to like dive this deep into it, just because I'm like, I have to do other research.
Yep.
But I'm definitely getting there.
No worries.
Do you have any parting?
Cool. It was a lot of fun. So
yeah. Do you have any parting words for our members? Words of wisdom or any additional alpha or something? I don't know.
I'm a humble farmer, just like everyone else. So
yeah, the humble farmer. Yeah. Okay. Awesome. Yeah. I think Convex is right in line, right on brand with like the humble farmer mindset. It's like, it's not going to give you a 10x overnight, but you just build conviction, you believe in the yield, you believe in the fundamentals, and you ape,
Yep.
Well, awesome.
All right. Thanks, Taiki. Appreciate it. Later.